Let's take a closer look at the second half of the year for autos. Joining us now is Dave Habiger. He's J.D. Power's president and CEO, Dave. And we have had some soggy, I guess you could call them, auto numbers lately, and we're trying to figure out what incentives are telling us about demand. And the fact that the new auto market is just a small part of the overall thing. You know, we've heard that the used auto sales are still pretty strong. So how would you describe the state of things overall as we head into the back half?
Hey, Kelly. Well, you know, it's not as gloomy as it might sound. This year, we're on target. J.D. Power's analytics team is projecting a $16.9 million, 16.9 million unit worth of cars being put into the market this year. Last year, that was 17.3. The good news for the automakers is that those numbers might be a little low on unit volumes, but the average sales price is still much higher than it was last year. We're up 3 or 4%. So net, it looks like a good year for them.
Is that sustainable, Dave, to see that we're showing it right now, $33,000? We know, of course, about the pickup truck that's going to carry the $100,000 price tag. Is this all because, you know, you can get pretty good financing terms right now? And what happens if those prices don't keep going up?
It is. So certainly financing and low interest rates drives those numbers. If rates jump, certainly those predictions will be lower and sales are going to drop. I do think you're going to see, though, activity in the used car market. If you look at the data that the team J.D. Power has put forth so far, we've got a lot. You know, used car dealers are also pretty happy. The new franchise dealers are selling fewer new cars, but far more used cars than they have in the last couple of years, and those tend to be at a higher price and certainly a higher margin.
You know, I was speaking in the last couple of weeks to an auto retailer, and I asked him, how's business? And he said, I'm supposed to tell you business is good, but it has slowed, and we don't really know why. Why has it slowed?
Again, I don't know what retailer that is. There are certainly some winners and losers in the market. You're seeing a fair amount of higher-end vehicles under pressure. So, you know, I think the simple story there is used cars are pretty good. The car that's 2 years old that sold for $85,000 that now is $60,000 at retail as a used car. That's it's a pretty good deal, and you might not buy the new car. That said, most franchise dealers would tell you that they're pretty happy right now. Again, interest rates will have an impact on that, but right now, lower volumes are still, let's see, at 16.9. We're at 2013 levels. So last time we saw a 16.9 million unit year was 2013. Still a pretty large amount if you looked at historical trends.
Dave, what's it looking like for electric car demand? We know Tesla just moved quite a few vehicles of its own. How big is that slice of the pie getting?
It's still a small number. I mean, EVs are just under 2% last year of all vehicles, with Tesla being roughly 2/3 of that number. That said, prices are getting to the point where it's mainstream, and miles are going up. The average mile on an electric vehicle is, we're hitting 200 from most new manufacturers and Tesla. So this year, you've heard from Phil and others, we expect Audi, Mercedes, most of the manufacturers who are mainstream are launching vehicles. They have the advantage of having the $7,500 tax credit. So they have a benefit that Tesla won't enjoy this year. But Tesla still has got mind share, and they are, clearly moving iron. Again, small numbers. We're still under 2%, but it's growing quickly.